Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we take a look at Wednesday's trade action and recap the February World Agricultural Supply and Demand Estimates report, and I guess it lived up to the hype, or maybe lived down to the hype. Typically a very quiet report in the month of February, but we did see a couple number changes to take a look at. Joining us here to do just that, our good friend Mike Zuzolo with Global Commodity Analytics. And Mike, good to catch up with you again, sir. I hope you are doing well.
Hey, Jesse, as long as it's not bleeding red on the screen after a WASDE report, how could I be doing bad?
That's a very good point. And kind of like I said, that February report lived down to the hype, if it could live down to the hype, so to speak. Not a lot in the way of changes in this report. We expected that, but there were a few surprises. I'll pull up on the video feed. I know you sent out just the report tables. I'll pull up the U.S. first. A little bit of a change there, a little bit of change on the world side, especially South America. So just recap real quick. What stood out to you in the WASDE numbers we saw on Wednesday?
Yeah, I think what stood out to me probably stood out to the trade, that we got a little more comfortable on soybean ending stocks because of crush being cut by 15 million bushels. I think that number is probably accurate, but they could have done some last month. Kind of similar to what they did in the corn with the ethanol. But I think that is probably the biggest issue for the trade to have to come back and revisit, is our carryover remaining above 200 million bushels as Brazil is getting deeper into their harvest. And then I think on the converse side, just how tight we are on the domestic supplies of wheat and on the domestic supplies of corn. And one of the biggest things I was looking at on the domestic stuff, Jesse, was where does USDA come in on average farm price? And they took wheat down only 10 cents to $9 a bushel. So, we're trading 750-ish on the soft red wheat market, and we've had a nice recovery. But we're still a long way away from $9 for an average cash sale price. And I don't know whether they think that's already in the rear view mirror or what. But so they didn't change anything on the corn, and they actually took the beans up a dime. But that's kind of where I'm at on the domestic side.
How about the world side, Mike? I know we got South American numbers we're going to dive a little bit deeper into, but what stood out to you there?
Yeah, we needed to feed the bull, in my opinion, on the soybeans because of the break to the downside in the meal. The Chinese crush numbers and soy meal prices starting to fall in the last 3 weeks pretty dramatically. And obviously northern Brazil harvesting, albeit very slowly because of rain. So that 102 ending stocks number was kind of a must-have, in my opinion. I think there was some disappointment out there that we didn't get closer to 100 million metric tons just because of the Argentine number that USDA cut. Wasn't enough in a lot of people's minds. I would be part of that group that I think we can see future cuts. The other side about that soybean number is that USDA stuck to their 153 number. So trade settling into a 152 to 153 Brazilian production number. So it really is all about Argentina right now for cutting supplies. Kind of similar on the feed grains, still tight on the corn. And what really got me going on the corn was going into the report was what happens to the foreign corn production and exports because of Argentina and Ukraine. And even though USDA bumped up Ukrainian corn exports because of the land traversing of exports by rail and truck over the last couple months, they did take down total foreign production, and major exporters are going to be less out there than they have been. And so I think we do have a better position in the next few months to really gain some corn market share.
Well, I think overall as well, I just want to make this point. I think with you here, you mentioned, it was a green screen day when we take a look at, how grains settled up, wheat, the upside leader. It felt like the algo computer trading initially took it, then the human element kind of came back into the trade on Wednesday, Mike. That was kind of the feel that I got from the trade reaction.
Excellent point, and I think that's why the wheat was able to drive the bus back home to the upside at the close. I think that before the market opened today, given what was happening with Turkey's earthquakes and Syria's earthquakes, where there's a lot of milling and there's a lot of storage bins and terminals in that area where those earthquakes happen, Jesse, I think there's a supply issue there that's brewing. Interfax is talking about it right now. No one knows much because you can't even get Twitter out of Turkey right now. It's such a bad situation over there. But between that and the hard red wheat finally starting to catch a bid on the weather, it's interesting to note that how the milling wheat is now starting to move. And this is a weekly chart with U.S. wheat in purple, soft red, where all the funds are so net short against the milling wheat futures. And again, I use that as my canary in the coal mine for the overall Baltic, European, and now Turkish market. We're starting to see a multi-week high develop in that milling wheat number in futures price action. That's going to be a big thing to watch tomorrow for me because that could be signaling a price floor in the wheat market.
And I'm glad you brought up as well the earthquake over Syria and Turkey. Obviously, a very dangerous situation, a tough situation for folks over there. But that's an interesting note, I think, in this wheat market overall that could potentially give us a little bit of I don't want to say a huge boost, maybe, but at least a kind of a demand, a floor, kind of, so to speak, here in the wheat trade right now.
That's exactly how I would classify it. I'm pretty confident they have plenty of stocks for their own domestic needs up north, in part because of that grain agreement. But then there again, you go back to there's a big election coming up in Turkey this spring. The grain agreement ends in March. Putin has been firing dozens and dozens of rockets and missiles almost every day at Ukraine, doing more damage and destruction. And the news is not really reporting it at all at this point. So the wheels are coming off the bus again as we get ready to come out of dormancy in the winter crop over there, and as we get ready to plant the spring crops over there. And I think the market's going to need to take notice of that, given the fact that in that previous chart, what you see in the purple, we're right back down to where we were before the war broke out. So there is next to no weather or risk premium in this market with the kind of stocks that USDA just gave us today.
Thinking of weather, let's turn our attention to Argentina. Now, you mentioned Brazil's numbers did not change in the USDA report out Wednesday, but those Argentine numbers, soybeans, we saw the cut there. I think maybe a little lost in the shuffle is corn, though. And we saw that big cut in corn, and that's where I want to start with you. The Argentine soybean crop estimate for corn down to 41 million metric tons. And I know as well, Rosario Grain Exchange earlier in the day on Wednesday, it felt like it kind of set us up for these numbers possibly with some of their cuts. But I know you sent me a picture as well of some of the Argentine corn production. I think this is very interesting to pay attention to here with regards to what's going on in Argentina.
Yeah, I agree. And I'm going to be a finer point than what you just about the Rosario number. The fact that they're at 42.5 and they're a must have with some more rain this coming week, which it's expected, but they're also going to have 102 to 105 degree temperatures in Santa Fe, Argentina, that same province that we're looking at pictures from mid-January. USDA has done a good job of allowing us to understand that it is so bad down there that they're harvesting for silage. And so they're really cutting the harvested acres, not as aggressive yet on the yield. But what I like about this picture is what they have up above. Corn yield estimated at just over 7 tons per hectare. That's down 7% from last month, but still up 1% from last year. I see that as an extremely hard goal to meet at this stage, Jesse, just based upon what they've already seen in terms of precipitation. And I think they've lost enough bushels and enough ground there that even the yield is going to be down versus last year at this stage. So I think that Rosario is more right. I think this is where it goes back to USDA raising the corn export number for Ukraine a little bit outside the guardrails, if you ask me. They said it was due to the land traversing into Europe and some of the internal river systems, not through the Baltic, which it have to be that because the Ukrainian Grain Association said today that they're down about 30% for the marketing year so far in corn and wheat exports. So I question the Ukrainian number from USDA, but I also think that there's more downside in the corn. So you've got now Argentina and Ukraine really sucking wind at this point when it comes to exportable supplies the next 6 months. And I think that's what I'm really going to focus on world prices, where are we sitting in terms of Argentine and European futures, and see exactly if they can't be the leaders to the upside, give me a little bit more confidence that the Chicago market can find some support in the cash. But if it doesn't, and the wheat doesn't hold up there at these levels, and if not go through $9 in hard red, I'd be nervous as we get into the second half of February. It's not a great seasonal time period for the corn.
Mike Zuzolo with Global Commodity Analytics is our guest analyst here today on Market Talk. And Mike, let's shift over to the soybean picture at Argentina. We've been talking a little bit more about this, but this is going to get us into more of our soy discussion today. That soybean number for Argentina dropped down to 40. I had that in front of me now. I just had that in front of me and it goes away from me. But talk about the numbers that we saw with the drop in Argentina there, Mike.
Yeah, 41 on soybeans for Argentina.
Thank you.
Kept the Brazil at 153. This is really nice way to dovetail what you said about the corn comments a minute ago, the lack of appreciation in the corn. And this is, we've been talking about this. It's been speculation more than anything, but I've been saying to everybody that I've talked to that I really think the meal market, why it's rallied, has been because of the Argentine drought. The traders, the funds decided to take on meal longs instead of corn longs. This really helps to show that analysis is more correct and it has more backbone to it, because we're seeing now Argentina's imports, the blue line, going above by a pretty dramatic amount. In fact, the biggest amount in terms of the distance between those two lines, going all the way back to 2015, 2016. So this is where it goes back to, I'm going to stick by the idea that Argentina's corn exports are on their way down and their soybean imports are on their way up. And if that's the case, then the meal should come back around. But that's where meal and the July Nove bean spread really are, I think, excellent indicators as to when this rally is over and when the Brazilian supplies come online. And also integrated into that is the currency markets with the Brazilian currency and the Chinese currency helping to pick up the issues with the Chinese balloon.
Well, and you mentioned on the soy meal side, looking at maybe some imports to Argentina there. Pull up one more slide here on the video feed, just looking at some of those export prices. I mean, it's definitely, I think this is a situation to keep an eye on. And I'll throw in there too, we obviously have some wetness concerns in Brazil, slowing the harvest there. One has to wonder what effect that could have if that continues. And I know that would segue itself into a delay in the safrinha corn planting as well, but that's a totally different topic for us, Mike.
Yeah, but you're right. Quality could be a real issue in soybeans. Getting them to the ports could be an issue if they keep up these rains. One area like Rondonópolis I looked at today, that's a Mato Grosso, city in Mato Grosso. They're looking at rain in the 14 out of the next 14 days, 3/4 to an inch, day after day after day. And some of the private analysts out there that I've listened to in the weather side suggest that you could continue to harvest beans. I find that very difficult to believe given their road structure and given some of their infrastructure. But this chart is the dog in the tail. And I think this is what solidifies the analysis about soy meal and Argentina are one and the same as far as weather. You've got a $45 a ton jump in upriver in Argentina over the last month, 42, and they're almost identical prices at 583 and 584 a ton. So Argentina's the dog, US FOB is the tail. That I think is going to continue.
Well, as well, you brought up China, and I just want to look at that from the soy perspective as well. Obviously, tensions rising there since we last talked with the balloon and everything. How do you think that all plays into our soybean export picture, our corn export picture? It's just the whole ag picture in general right now, Mike? Is it too early to tell, really?
No, I think that my sense, and this is coming from the Lunar New Year holiday, Jesse, and the numbers that we've gotten, some good, but some really bad, like their car sales down like 30% in the month of January versus January of 2022 and down 40% from the month of December. You can't have numbers like that when you've got a property bubble that's bursting and you've got a consumer on the sidelines because he's been jailed, because he's been under COVID lockdown. You throw on top of this the spy balloon. I think that the United States is going to dig deep in terms of what this balloon accrued as far as intelligence. We haven't seen the end of this situation, and the market showed that Monday morning. We woke up and it was the pork and bean trade in reverse, liquidation of beans, liquidation of hogs. I really want to be sensitive to that occurring again once we see the next shoe drop. I think what I'm saying to you is the demand side of China is really iffy right now, and we can't count on it because they will probably go to Brazil for soybeans. They will try and take their stocks of corn down to zero if they have to, just because they won't want to have to buy from us in case we get nasty with one another on the geopolitics. And so I am. That's where earlier I talked about the wheat and the corn and the wheat really performing here. We got to have corn because I'm more and more nervous about soybeans. And so I think corn puts are something to really look at in the May contract if we don't perform well as we close out this week and come back next week. Because I just don't want to wake up on a Monday morning and hear that China's canceled, 2.5 million metric tons of corn and 5 million metric tons of beans and not having something underneath me. That likelihood, I think, is better than 50-50 right now.
And I would agree with you. And we are no stranger to seeing China cancel sales. So I think that is a great point there. You brought up the pork and bean trade. I'll segue over to hogs. Decent day on Wednesday in hogs. I wonder, though, was that a bit of a technical bounce possibly, or what did you see there, Mike?
Yeah, I think it was, but I also think we've pulled in that Feb-April spread well enough. I tell you, Jesse, what we've talked about in the past really rang true with the Tyson earnings. They really took a hit in the pork sector. Some of their beef wasn't the greatest, but their sales were very strong still in beef, but they were weak volume, weak sales in the pork side. And that really surprised me because pork is very affordable, as we talked about before on your show. And so I would reiterate the idea that the less China takes in here, the more we're going to have to find in our meat counters and restaurants here. And that's going to keep pressure on that cutout, keep pressure on the deferred contracts. And that's really what I'm looking at right now is you've got June, July hogs breaking 100 again. That might be an area where we really want to go after some hedges in case this Chinese issue does get worse, kind of like the same mindset. Harder to do puts in June, July hogs because of the time decay. You might have to actually do some futures or sell some options above the market, something like that.
And Mike, over in cattle as well, very quiet day. It felt like their Wednesday steady firm, call it maybe, something like that. This cash cattle trade's been interesting the last week or so, though. I know that's an interesting point to keep an eye on. What's your thoughts on the cattle trade?
Well, I know you were at Cattle Con, I believe, in New Orleans, and I know that some of the analysts down there from clients I spoke to were really talking up this market, and they got what they wanted in the short term because the sellers held on and it paid. I mean, the sellers came in and got to that almost 160 level. Now the sellers are wanting 161, 162 this week. I think they're going to overplay their hand, though, because I think the demand side of the equation is a little bit softer than we want. Now, having said that, if we would get cold again, then I would be more nervous about the market going back up again and the cash market spiking. But I think that the sellers got what they want in part because of that cold weather, and they could sit on their marketings. And it'll be interesting to see what the total slaughter is this week, because I would bet we did a lot of business this week at that 159, 160 level, and that might cool this market down. The other thing I'll say about cattle is, along with the hogs, the cattle still have to keep one eye on the feeders in case this corn market goes up, because that sensitivity in the opposite trade between the two is really still very evident.
Mike, how about the outside markets real quick? I know we touched a lot today. Any thoughts in either the stocks or crude oil, energies, et cetera? I know we had ethanol numbers out today.
Yeah, using both fists to knock on wood, we're going into the end of the week with a weaker dollar and a stronger crude oil trade. Now, the dollar's 3% off its lows made just last week, but I like that type of a look in the market. What I don't want to see is a safe haven buy in the dollar and then a break to the downside in the crude. One of the best things that happened this week was Department of Energy bumped up the 2023 liquid fuels demand. Kind of a surprise to the trade, and it really put a floor underneath us in the crude. So lows in the crude made this week need to really hold for the grains and for the whole commodity complex, if you ask me.
Mike, fantastic analysis as always. Before we wrap it up, any final thoughts for us?
No, you just do a great job, Jesse. It's a pleasure to be on your show, and it's one of the finest out there.
Well, thank you very much, sir. I appreciate it. And again, I know if folks want to reach out to you for marketing advice, globalcomresearch.com, or they give you a phone call too, can't they, Mike?
Yeah, call me toll free 866-471-2588 after the market closes. And a lot more people have been doing that because they have specific needs, whether it's fertilizer or fuel or whatever. Maybe we don't cover on today's program. Please give me a call.
And again, you can find them online, globalcomresearch.com with two M's, globalcomresearch.com. Mike Zuzolo, thanks for joining us. We'll talk to you again next week.
My pleasure, Jesse. Thank you.
And that's Mike Zuzolo with Global Commodity Analytics. That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.